Monday, if anybody ever happens to watch these videos. It's Wednesday, the 27th of May, 26. It's the final week of May. I haven't traded anything this week because Monday was a bank holiday and I didn't want to touch the markets since it was a bank holiday. And yesterday I couldn't trade because I had to wake up this morning very early because we have a religious holiday, Muslims. It's kind of like Christmas, I suppose. So I'll see if I can make up for lost time. Just looking at the DAX EU European Open now, 10 minutes ago. Still have a cold from last week. Stuffy nose and a little bit of fevers, but not much. Despite the market being closed on Monday, there was some action on Monday apparently, so the market gapped up pretty significantly. Oh, actually, no, it's not that significant. It gapped up a little bit on Trump. I don't even want to call it a Trump statement. It's just sort of like word salad. Something about Middle East peace, and that just obviously proved to be untrue, like everything that he says. So there is no peace deal, but they're not even close to a peace deal. Neither side is agreeing on anything, so there isn't even a framework for discussing a peace deal, because the Iranians are just saying, no, we're not giving up our uranium. No, we're not giving up the Strait of Hormuz. No. You can't defeat us through negotiations if you couldn't do it militarily, which just makes sense. Why would you defend something militarily and then just willingly give it up just because the other side asks you and says, we'll have a peace deal? Like, you couldn't take it, so why would they give it to you? Anyway, Trump's just lying, obviously. He's just a hideous human being that's just lying every time he opens his mouth, like twice in one sentence, manipulating the market. So I'm going to stop rambling now and actually focus on what the market's doing. It already looks like a sort of somewhat disappointing open, I suppose, because bar 2 is already an inside bar of bar 1. So bar 2 is only 26 points on the 5-minute chart. So the volatility this week is, or at least today, sorry, bar 1's 50 points. Whereas sometimes you see bars that are like in excess of 100 points in the DAX. Just looking to see what bar 1 did yesterday when I wasn't trading it. So yesterday was 75 points, so I'm pretty sure most of the days have bigger ranges than what we have today. So So this one here was Friday. Okay. So this bar was actually over 100 points in range. It says change of 73 points, but that's the open and the close. I've been having the flu, and feeling rubbish. On top of it, I had the Monday was a bank holiday, and then Tuesday I had to catch up with a friend who I haven't caught up with for a month or more. But I was feeling rubbish, but I went and did that anyway. I had to buy some clothes for this religious holiday. Then I had to go to this religious holiday. Then I had to catch up with the guy from the broker company that I work for, my account manager. I just feel like I've just been running around all week doing absolutely nothing of any consequence and not trading. I just feel like I've been feeling unwell and just running and not getting enough rest and just running around doing stuff of absolutely zero consequence. You know? And I need to just forget about all the bullshit and just focus on the chart and the actual important thing in my work, which is trading and reading the chart. You just hear so much rubbish and the market's it's a bull market and everyone's bearish. It just doesn't matter. None of it fucking matters. The only thing that matters is the chart. Anyway, I've been wanting to just get back into my normal routine of trading the chart, focusing heavily on that and resting in between and just doing things that are sort of regenerate my energy rather than things that spend my energy, which is like going out with people and talking and whatever. I just want to trade, man, and relax and be alone with my own thoughts. That's what I want. And rest. So I was wondering if this breakout will be successful. Bull bar, bear bar, inside bar. I was trying to think about this rationally because I have been away from the chart for so long. It's like, it feels like so long. Okay, so here's a high one long. This is a long signal. It's a breakout and a pullback, and the first long signal here. It'll be interesting, although I didn't take that long, just because I'm wanting to let a few bars go by to give me a better indication of what the market's doing today without FOMOing into something and making a bad decision, because I've had that happen to me when I've come back on Monday. I'm just itching to start trading and I just start pressing buttons and getting FOMO, like I should have captured this point, this. So I just want to let a few bars pass and then figure out what's happening. I was going to say, it'll be interesting to see what happens to the traders who took the buy here, the long signal. Just try and think about it rationally. Okay, so there's a 1-to-1 already for them. Well played. Market vacuuming up to yesterday's high, it seems. Had I taken that position, just trying to think, if I put my stop loss down here, I would have been risking 24 and 13. So 37 points, and I would have made 37 points. Interesting to see what happens here at the 1-to-1, because that's already a very good trade. Or will it now have two legs down? A two-legged pullback, since the measured move was already achieved. Yeah. So the first 15-minute bar is a decently strong bull bar because it's closing above its 50% point. It has a shaved bottom, so everybody agreed that it's going up. As soon as the bar opened, everybody in the world was pressing buy. Bar 2 gapped up slightly, so people were buying the close of bar 1. And say if you're a 15-minute bull and bought the bar 1 close, put your stop loss below the low of the day, you already have a 1-to-1 as well. So bulls making money. Bears not making money at the moment, which makes me think that I should not attempt to be a bear just yet, unless I see more bearish price action. Limit bulls are making the most money. In other words, bulls buying pullbacks are making the most money. Buy the close bulls are making money. If you bought the close of bar 1, you got a measured move. If you bought the close of bar 3, measured move. And stop order bulls are making money. So if you bought above bar 3, you're making money. If you bought a pullback below bar 2, you're making money. In other words, limit order bulls have made the most money so far. Bears, on the other hand, suppose if you sold the close of bar 1, you would have made a scalp. If you sold the close of bar 4, you would have made a scalp. You're making a scalp right now of some 20-ish points. So some bears may be scalping, but very difficult. Very difficult for the bears to scalp here, I think. I was just going to have a look at the bigger picture a little bit. So yesterday, so Monday bull bar, Tuesday bear bar. If I show the RTH chart over here, the daily, sorry, that's the FTSE. I'm looking for the DAX. So that's Monday, bull bar. Tuesday, bear bar, inside bar. And today's open is gap up. It closed down here and it gapped up. I'm not sure what that means. The obvious thought is, well, something's bullish because it's gap up. However, yesterday's bar was an inside bar and it was a bear bar. So overall the market is bullish. On the larger time frame, on the weekly chart here, it's bullish. What I was thinking, however, is that this inside bar here will be a problem for bulls because the market will most likely come back and test it, and it just did. It's in fact testing the buy signal here. Probably going to take out break-even stops, which it has just done. The inside bar causes problems for me if I'm trying to buy something above it or below it, sell below it. I think that the market sees this as a tight trading range, the inside bar, and often comes back to test it. It's a triangle on a smaller time frame. If I look at the 1 minute chart, you can see the triangle here. Which is a tiny trading range. Like this. And like this. That's what an inside bar does. And it often comes back to test the inside bar. Test the triangle to see if there are more buyers there. See if it holds this trend line here on the smaller time frame. What happens at that trend line? No doubt some buyers might step in because it looks like it's forming a bull channel. However, that can quickly fail. The range is so small, which makes me think like, even if it looks like it's going short, it's just a tight trading range so far. Okay, 15-minute bar here. Looks like it's trying to make a bear bar. The second 15-minute bar. Is it worth considering a sell below that bar? With a stop above that bar, provided that the market actually trades below that bar. Like this. For a measured move down, if this breakout is failing. A failed breakout, measured move down. I think what I'll do is wait for another 10 minutes and see what the 20-minute bar does. Because I sort of have been experimenting with a strategy around the 20-minute bar. If this bar closes bearish, I will then sell it. If it closes bearish in 10 minutes, I will sell, close, and put my stop loss above it. And hope for a measured move down. It seems to work well for opening reversals, this idea, where I've seen it and taken it in the past. If the first 20-minute bar is bullish and the second 20-minute bar is bearish, I often am able to capture an opening reversal with the measured move down of that bar. At least, sometimes more, sometimes twice the measured move. So say it were to close here, there, I'd put my take profit down here, get a 1-to-1, maybe hold even for a 2-to-1. But I'm not sure about the shorts actually. It's currently channeling up, and some buyers did come in at this trend line that I've drawn on a small time frame. No doubt bulls seeing the same thing that I'm seeing early on and putting limit orders there, trying to capture a long, a sort of bull channel and then take profit at new highs, presumably. I think that is how a bull channel forms, because buyers are buying pullbacks and they're selling at new highs rather than buying more at new highs for a big breakout. And then when they take profit, it pulls back to the channel line and people buy more. And this kind of environment, I think buying new highs is not the best strategy. May not be the best strategy. I'm sort of trying to be patient because I don't want to start clicking buttons. After being away from the chart for a while now, not looking at charts at all. Just looking at the other indices here on the right. Hong Kong down, Japan down, not much, just a little bit. Gold down. So broadly, the market did not really do much today. Oil down as well, as a matter of fact. So yeah, the market not doing much this Wednesday. $15-minute bar, I think, closed. Yeah, it did. It did just 2.5 minutes ago, so 2 bull bars. Interesting that not everybody agreed on this bar that it's going up. So it pulled back a little bit, went up, and then came back down into the range of bar 1. So the body of bar 2 is not as big as bar 1, and the tails show a little bit of I suppose confusion or indecision. I think maybe traders not wanting to buy new highs, but looking to buy pullbacks. Could be an all-day bull trend, with its low being the low of bar 1. I saw a day like that last week, on Monday, where the market opened, began to rally, and never went below the low of the day. And bar 1 stayed as the low of the day. I think that those days are pretty rare. Trend days are rare in themselves. I think somewhere in the 20 to 25% range of days are trend days. 1 in 5 days, 20%. And I think that the trend from the open bull trend, or trend from the open bear trend, where the opening bar becomes the low or high of the day, I think that those days are even rarer. So the probability that this will remain a bull trend from the open, bull trend day, and the opening bar will be the low of the day. I think the probability of that is always on the low side when you're watching an open. Of course, the more bull bars it prints, the more likely it is that that will remain the low of the day. Now, the market's sort of trading at this prior high. If it sells off from here, it could form a head and shoulders pattern. Something like that. I believe the reason that this stuff happens is that bulls who bought above here, they see the breakout and they see it failing, and then when it comes back to their entry price, they get out break even because they're not sure. And when they get out break even, they sell their longs and become sellers in the market, and the market falls. I believe that's how you get, in principle that makes sense to me, that is how you get head and shoulders patterns in the first place. Because people are taking break-evens. It would make a bit more sense if this market did this. It went up, pulled back, then went up and pulled back below this low. And that changes the market condition. And then bulls see this and they go, oh, it's making new lows. If it comes back to my entry price, I'm going to get out. And then it fails. That's how I've seen head and shoulders being a bit more high probability when the market makes a new low here. And then it says it's no longer a strong bull trend because it's now making lows. I think that increases the probability of a head and shoulders pattern playing out. Maybe I can find it on the 60-minute chart somewhere. Here's an example. So the market goes up like this, pulls back, makes a breakout, and then comes back here, makes a new low below this low, below that low, and then once it's done that, it pulls back, and look where it went to, and then it sold off. So it went to here, where people got long above, but it made a new low, and traders are like, hold on a second, this is not a bull trend. And when it comes back to their entry, they get out, break even, and the market drops and has a big sell-off. This is how a head and shoulders pattern plays out. And this is why head and shoulders is a bearish pattern. Because there are traders who are trying to get out break even. They feel trapped. I might be trapped here because I'm going to short the market in 1 minute. Don't know the probability of this trade. I think it's decent. I think there is a potentially more than more than a 50% chance, or maybe 52% or 55% chance that I get a measured move down if I sell this bar. I'm shorting it in fairly small size, $5 a point. And I'm risking about around 30 to 40 points, depending on how the bar closes. So I'm shorting this market. It did just make new highs, so I'm aware of that. But this idea, I'm not just trading it willy-nilly. It's because I've observed this pattern play out. A reversal, an opening reversal. Although this is still trading above the breakout point. So it's not I'm not super convinced of it. It's just some pattern that I've observed. I'm hoping for a failed breakout here and a measured move down. It could be that because I am selling in something that looks like a bull trend, but I'm only selling because I have this trading idea, this pattern that I've noticed. This could be the two-legged pullback that I was talking about. One leg pullback, and then two legs, so it just went below the prior bar low. So it could be a two-leg down already for the bears. And that's all they're going to get. That could well be the case. And I'm trapped here. If I do get stopped out, I'm thinking of reversing position to long. I'm wondering what this guy's doing now. He sold short the FTSE. Made a small loss. Looks as though I've been trapped. I'm having a sinking feeling that this market is now going to rally and break the high of yesterday. Because it did not react the way I expected it to. There was a bear buy and everybody pressed buy. Except me. I'm the loneliest bear in the world. I went for a small size because I've just started trading again. However, that doesn't mean that I want to make a mistake. I was hoping for a quick sell-off, but that is not happening. using a much wider stop than what I would normally use in the DAX, because I always trade the 2-minute chart except for this one idea where I trade based on the 20-minute chart. A measured move down would be there precisely at the low of the day. If the market stops me out here above the high of the day, it will tell me something about the market condition, which is the market is breaking highs. It's not making new lows. So, at least for the foreseeable time, stop looking for shorts. Seems kind of logical. Appears that this trend line is actually holding. The bull channel line. I have heard it said that a bull channel is a bear flag, so the most likely breakout is to the downside. However, I don't think it is a high probability play to bet on that constantly until you see better evidence for it. Yeah, maybe this was a bad trade idea. I'm wondering if I should close half the position here. Because it's not doing what I want. Three consecutive bull bars on the 15-minute chart. The 1-hour chart is still bullish. It looks as though it wants to squeeze up and close a really strong bull bar on the 60-minute chart on its high. I'm not sure now. The longer this market doesn't actually do what I want it to do, the lower I imagine my probability to be of making a successful trade here. I'm still struggling with being sick, so I'm kind of got a blocked nose and all this. So. Excuse me. 1 minute until the close of this bar here on the 5-minute chart. I fear that it's going to rally up and close a really strong bull bar, because that often happens into the close of important time periods like the 5-minute bar and the 10, or like the 15, or the 1 hour. And the 1 hour bar is about 10 minutes from closing now. I'm sort of contemplating getting out of this position now, but since it's closing a bull bar, I want to see what it does. I was sort of thinking in my head, if it closes 2 consecutive bull bars against me, I want to get out. But yeah, the idea seems kind of stupid, trying to short this breakout. But I'm not doing it willy-nilly. I've paid attention to this 20-minute bar and what it does in the past, and a lot of the times the direction of the second 20-minute bar gives some pretty good probability of predicting the next 20-minute bar's direction. But it's already 10 minutes into this bar and it's only gone up, so not sure about it now. This could be one of the times that it fails. That this idea fails. Come on, you dogs. Give me a push lower. Yeah, DAX. It's not really working, is it? I'd love to see a bear close on this bar. What's the 10-minute bar look like? Not great. Seeing as though all I've seen so far is the market moving against me, I think I want to close half my position. Because I believe it's the market telling me that I'm wrong. Either in my timing or in my prediction of the direction. Oh, it might be too late for that. I might get stopped out here. Crappo. Yeah. No good here. I think. This market really kind of sucks at the moment, in my view. 30-minute chart. Bullish. not turning out as I had hoped. In fact, the 15-minute bar shows 3 consecutive bull bars. I think I might cut my position in half here. Closed half of it for a $40 loss. Because it's coming up to the close of the first 60 minutes and it's just a big bull bar. And it looks as though it wants to close on its high. That the bulls are going to start buying into the close. Because it's just moved against me the entire time since I entered. Yeah, it's just holding this trend line, it seems. I'm pretty sure in the last minute and 30 seconds I'll get stopped out here. Because I've seen this many times where it just races up in dying seconds of the 60-minute bar makes a new high. I did take it in quarter size though, but it doesn't make me any less happy that this trade didn't work out. Excuse me. Nope. Yeah. Thought that might happen. I was becoming a little bit hopeful, but nope. Just nope. So my first trade of the day, $140 loss. Not happy, Jan. Not happy, Jan. Just breaking out above yesterday's high. A quick 50-point rally here now. You want to attempt to buy it here? I'm going to take profit here. So that was about $200. Oh no, 240. So I'm back. After I attempt this swing idea of this 20-minute bar, second 20-minute bar, I after that trade is over, I revert back to my standard way of trading, which is scalping the 2-minute chart. And taking really quick profits, but in full size, which is $20 a point. I thought this was a pretty strong move. I attempted a breakout, and it just went above the high of yesterday, which is a bear bar. So I was thinking for the fact that there are going to probably be more sellers above a bear bar on the daily chart than buyers. However, I thought there was a decent chance that it makes another stab up. A more than a 50% chance, because I was thinking about the idea of shorting it up here, and it just seems way too easy. Like the market will want to go up a little bit more and then come back down if it wants to sell off. But I'm pretty sure that on a day like this, if I look at the daily chart, where the market moves above a bear bar, there's probably going to be more sellers above that bar overall than there is buyers, because it's a bear bar. Could sell off from here, I suppose. But I was fairly sure in that instant that it might make another stab up. I think I'll just wait to see what plays out at this key technical level, which is yesterday's high, before I take any more trades, because I thought it might rally up, but it is not doing that right now. This whole open just looks like something that I don't want to trade at all, because it's a bull channel, but it's very weak. It looks almost like an ascending triangle, which is technically a bullish pattern. So I think what I'm seeing is stuff that is confusing me. I'm seeing reasons to sell, and I'm seeing reasons to buy. Normally that's okay, but this is a bullish pattern, I believe, because if it keeps banging up against this price, it's probably going to break out. And it's making higher lows, sort of. This is a bullish pattern. But this kind of open, like, it's still confusing to me, because I feel as though there are conflicting signals, which in my brain I try to make binary decisions. It's either one or the other. It's either a bull trend or a bear trend. It's a trend or a trading range. And when I see the market pulling back every single time it makes a new high, like, that to me tells me that it might just be a trading range. Sorry, when I see conflicting signals, or the market failing to have big surges in one direction, I think trading range is something that I want to stay away from if I can. So I automatically don't feel like trading this market anymore. I'm seeing 4 bear bars on the 2-minute chart, which should be a sell, but I've already tried that and it didn't work. The sell did not work. So I'm seeing something that I would sell, but it didn't work, which automatically tells me that's a conflicting signal, therefore trading range. It's not clear. And if it's a trading range, things that look bearish get bought, and things that look bullish get sold. I don't know if I'm reading that correctly, or if my interpretation is right or wrong, but that's sort of what I can cobble together with my knowledge of the market so far. There may be a trader out there who's like, nah man, this is super bullish, you should just be buying it, scaling into a long. Maybe. There might be traders who are going, it's a bull channel, a broad bull channel, you should be maybe selling new highs or something, I don't know. But right now, I am confused. And when I look at the 5-minute chart, my confusion is not confusing to me. It's not surprising to me, because bar 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 are all overlapping. There is no better definition of a trading range than that. Almost 2 hours of overlapping bars. So not even this. Nothing, no movement, no trend, not even 2 or 3 consecutive bars breaking above the high of a prior bar or below the low of a prior bar. Nothing, just the trading range. Nothing to indicate that it's a strong bull trend or the beginnings of a strong bull trend. It is just trading range. Because this is the case, I am going to stop, be disciplined, and stop trading this market now. Because I think that one of the most important skills in trading is knowing when not to trade. When you have a low probability. This is not a high probability day. This is not a high probability day. Yeah, I'm gonna pause the video now. I'm gonna go make myself a cup of tea. My nephew's over again, and I might go play with him if he's still awake. But I'm gonna wait for, I'm gonna come back probably in a couple hours and see what happens, what's happening. And if I can't find anything then, I'll just wait for the US session. Yeah, I'm too sick and been doing so much. I'm actually a bit too tired to be putting up with this crap here. This is crap in the DAX. The DAX today is a piece of shit and I don't want to trade it. Anyway, thanks for watching if anybody does watch it.